All right, welcome to our Built with VLayer series. I have my friend Wojtek from CEO and co-founder of Accountable. How you doing, my friend?
Pretty good, exciting. Although it's raining outside, I have a very positive and cheerful mood, especially for this podcast.
Yeah, the weather is always a non-factor when we're in Web3 because we're in front of our computers. We like to have fun and build some cool stuff. So it's exciting. I'm happy to have you on the show today. And I know the listeners and viewers of this are going to be pretty ecstatic about what you guys are building. But first off, before we kind of get into the meat and potatoes of that, I always like to ask my guests, what got you into Web3? Tell me a little bit about you personally and kind of what was your trajectory to get you into our wacky space of Web3?
Yeah, cool. It's actually a pretty long story, but we'll try to keep it relatively short. So I studied quantitative finance in Amsterdam. I moved there from Warsaw, Poland, when I was 18, and always wanted to avoid the world of corporation and basically do something on my own. So started like a trading group at university, and we were trading with people's money. At the beginning it was like CFDs with very high leverage, doing like some hedging strategies around it, blah 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 blah. We made some good cash with Brexit back in the days. Was actually like the big milestone in my personal portfolio growth. And then there was a regulation that kicked in Europe that prevented utilizing very high leverage. So our strategy was basically gone, and we were looking for a place where we can still count on good volatility and have some sort of edge. So I was introduced to crypto in early 2017. And yeah, there was never going back from it. As you remember, some of you remember, like the run in 2017 that ended beginning of 2018 was pretty insane. Like the era of ICOs and everything that came with it. Of course, made some life-changing money at the time. Almost lost it all. As many probably can relate to that. I thought that this is up only paradigm shift, and there will be no stopping. I couldn't be proven otherwise. So after I lost quite a lot of cash, I decided that the next time, if it's gonna
Oh,
be
no.
given, I wanna do it more professionally, and everything I did was in mind to become a trader. But then I realized that discretionary trading in a professional world, it's almost non-existent. And as being in Amsterdam, the city of market makers and trading shops, right, I was trying to get into all of those flow traders, IMC, and so on and so on. And I realized that unfortunately, even my relatively technical background, it's not enough to get in the end. They want parties that are, maybe it's not a nice word to say, but like bots, effectively
Right.
people that only
Yep.
care about the algorithm. And they even explicitly say, we don't care if you care about financial markets, that's not your job. So then unfortunately I'm not a mathematician from Oxford to compete with those. And then I was very lucky on LinkedIn. Venture capital firm Maven 11, that back in the days was very small, like managing only like 15 million, hired me as an intern because yeah, they saw some sort of potential, I guess. And the rest is history. I started working there in 2020. We grew the business to actually multiple business lines. I think right now we are, well, not anymore we, but we're still very close. So I'm calling we. We are managing around 800 million. That was my latest check. And I was assigned to start the credit arm of Maven 11 called M11 Credit, because we invested in Maple Finance, the lending infrastructure in the early days. And we wanted to be proactive, show that we can be part of it. So we became sort of credit underwriter for Maple, and we're running multiple pools on the platform. And this is how my story with credit basically started, and how from a guy that couldn't get into float traders to be their average employee, I actually started being the lender to float traders and talking with the big guys and being able to be partners with them to some extent. So long story short, that's how it started.
No, it sounds like it's a wild ride. I have a very similar background, and I do remember the 2017, 2018. That was the wild, wild west ICO movement. I mean, it was bananas to see some of these projects, these 18-year-old people making life-changing money that you pointed out so well, that never managed a budget in their life. But it was, I think what that did is it opened up this new paradigmatic shift around what this technology can do. I think you and me both agree that as fun as it was to make good money, we were in it for the tech, what it can do to disrupt, right?
Yeah, definitely. Although at the beginning I was like, I have zero idea if this is gonna become something. It sounds legit. It sounds that it can mature. Yeah. But I also kept in my mind that maybe it was a hype that can go away. Then the signals over the years, of course, like proved that this is not going away, and if the big guys are putting money into it, they don't do it just to disappear in the next month. So while there was a lot of skepticism, especially when the price went down, the actions and the fundamentals were speaking for itself. And I think even right now, while Bitcoin hit all-time high, but for example, as a back holder of ETH, unfortunately, it still looks relatively poor, right? Like we are, nowhere near like the all-time high levels. But the fundamentals and what's actually going on behind the scenes, it's actually screaming that we are miles ahead versus the previous cycles. And back in the days, if President of United States would say that let's have Bitcoin as a strategic reserve asset, like Bitcoin would probably triple overnight. And right now, it wasn't that euphoric, or that the banks can hold crypto on their balance sheet, right? Like that opens doors to actually invest in structured products on chain, something that, back in the days, you would never believe it's going to happen already. So very bullish on the space, and I'm glad to be part of it.
Same here, man. There's no turning back. And then getting into a little bit of, this financial upside that people initially get in, then the question becomes, all right, okay, how do I do this the right way? Because we all know there's been a lot of rugs. There's a lot of uncertainty, speculation around yield farming, and even just some of these DeFi protocols that offer some really substantial upside makings in terms of liquidity and from your yields. And it's caused us a little bit of a wreck. And what I love about, and I can't wait to get into this more with Accountable, is what you guys are really doing to solve that, to provide what I'd say this peace of mind, because that's what's needed. I think there's been a lot of distrust that's been kind of promulgating or culminating, I should say, into where you're starting to see a little bit of resistance on, when a new DeFi protocol comes out and makes these specific claims. You guys are addressing and hitting right on the focus of security, verifiability, whatnot. So I want to get into this and kind of let people know what y'all doing. So first, your platform focuses, most of these organizations to verify all of their financial data. And I like it that it's in real time. What would you say the biggest problem that Accountable is solving?
So as you said, like the number of yield opportunities in crypto, it's only growing. And while there's zero issue with stuff like Lido, Aave, Compound, and so on, where everything is on chain and it's an open book where people can basically check what exactly is going to happen with my money if XYZ event will occur. While there are so many products that are hiding basically behind the token, what they are actually doing with your money, just because there is a protocol that tells you they're gonna buy US treasuries with your cash, and you click a deposit button and you acquire some sort of token. It doesn't magically happen that these treasuries are being bought and that you actually have at least one-to-one claim on these assets, right? So it would be great to know that what happens in the off-chain world actually is represented in this token that you're receiving on chain. So I started calling it like a digital receipt of an activity that happens somewhere else. And if you think about all of these yield-bearing assets like Ethereum and so on, in reality, just because you click mint or deposit or whatever the semantics are, it's actually an unsecured loan to a centralized counterparty that takes your money and utilizes it to deliver you some sort of yield, some sort of performance. But the only activity that happens on chain, it's issuing the proceeds from that activity and the proof of deposit itself. So if the underlying is not there, if the reserves are not there, if they are not actually doing what they are supposed to be doing, then what you hold in your hand can be worthless or close to that. So what we are solving is an ability for businesses in broad sense, and that can be enterprises, that can be DeFi protocols, basically anybody that touches something off-chain and on-chain, but that's less applicable, can prove in a trustless manner, and that's very important as well, that they are operating as intended, that they are solvent, that they are doing the good job in broad sense. And why the ability to do it in a trustless manner it's important. So if you're a market maker, for example, you're called flow traders or Wintermute, there is absolutely zero chance they will share with you any API keys or wallet addresses, just because behind those keys there is a secret sauce and the IP of those companies, which is basically the value of the company itself. They will never sacrifice going out of business by handing in the keys to their strategy, to put it in simple terms. So we need to combine the impossible. You want to have transparency and be privacy preserving at the same time. So the way we do it is that we enable them to generate proofs about their activity off-chain and on-chain in their local infrastructure on an isolated machine. So there is zero third-party involvement in that process, while we still can trust the data because it goes through like our software, our connectors, our infrastructure in general. So that's number one. That's on the data verification side, and the natural extension of it are the vaults that are actually going to launch in the coming weeks on Monad testnet, as the name says, to test everything.
That's right.
But we also felt that like once you have the information that I like some counterparty, I want to do business with them, either lending or deploying capital, you need to also give them means to materialize this deal. And a lot of platforms today are sort of in a certain niche. They do only one particular style of lending, for example. I only do over collateralized with dynamic rates, or I only do unsecured with fixed term rates. So we decided, like, why would you want to limit yourself? Like, give people a menu that they can choose from, a bit like Conduit for, like, creating your layer 2, layer 3. You select what you want, you create the deal, and you plug the verification directly to that structure. And whether you want to have KYC, you want to have permissionless, it's all up to you. The platform should serve the clients and not dictate how they should do their business, especially if you deal with large financial institutions that they know how to do their business. So you need to be helpful to them to maybe find an area where they can improve. While if you're going to tell JP Morgan, do it my way, they're going to tell you, okay, maybe in 5 to 10 years. So that was the idea, to create this very neutral and open and highly customizable platform where you can have 2-in-1. So the liquidity layer and the verification layer as well.
And what I really like about your data verification layer is that you put security first. I know that's not a sexy topic. People don't really care about security. They care about it when it affects them, right? When something actually happens that's bad, then they're all about security. And I think you guys really put an emphasis, and this is where we get those zero knowledge proofs. And I believe you guys even utilize secure enclaves, which really kind of emphasizes, even down to the metal, why it's important to have this secure. So don't just trust our word for it, right? We definitely want to make sure that we have that value in it. So one of the things that, you worked with vlayer, I would love to kind of get into this kind of partnership that we started to do. We call it continuous proof of reserves, which is basically the biggest benefit. And I guess why is real-time financial verification, to say, so critical in the DeFi space right now, or even in digital finance in general?
Yeah, so I can tell you many examples why, and maybe let's start with 2022, right?
Okay.
I'm not even gonna touch on FTX and why it would be nice to see in real time
Oh,
whether they have the money of the users or not, but that's like obvious.
yep.
The way that 2022 like basically exploded with all of the fraud and so on was also because lack of proper financial reporting. And as a lender on Maple, we were basically receiving once a month an audited financial report, basically, you know, a spreadsheet that the borrower was creating themselves. And you know, like it works until it doesn't. When the market is great and everybody makes money, then it's easy to hide it behind numbers that look okay. But when the market turns, unfortunately, you know, the level of fraud that we experienced, and we also lost a lot of money because of that, with one counterparty that was basically, you know, writing some stories in those statements that
Yep.
had nothing to do with reality. And that was the trigger to rebuild how we are doing business with each other and how we are verifying that the party that we are supposed to be doing this business, it's actually legit. And that's not only to make a decision, right? Like I want to lend to them, I want to give them my money, but also then monitor that they are indeed still doing the right job. Bybit hack was a very good example of it, right? A lot of borrowers, a lot of platforms, including those yield-bearing stablecoins, sent a tweet. Everything is fine. Our exposure is minimal. But with the use of platform like ours, they can send live proof. My exposure to
Mm,
Bybit is XYZ. And you can send it as a dollar value. You can send it as positions. You can do whatever you want, but at least you have a proof. And in lending, that's so important that we know lenders that actually came to us after Bybit hack because they needed to recall all of the loans. That's the only way to check if somebody is healthy. If you don't have this type of verification, you're gonna say, okay, you say you're healthy, give me my money back. So then I will believe you. And they needed to recall all the loans. With us, they could just ask a simple question. Do you have the money? They get a proof back. Yes, we have. Our exposure is XYZ. Are you okay with it? Not okay. That's, you know, that's a discussion to be to have then, and not like send tweets or screenshots that all is good. So we need to be able to constantly see if stable coins, yield bearing products, and so on, borrowers are actually still healthy, because then you can act. In credit specifically, the first one that will know that something is off, the first one will call back the loan, and it's much more likely to get their money back than the guy that will be the last one and will be waiting for a penny on a dollar.
right.
And maybe like final thing, to not to make it too long, but if you also think about all of these even over collateralized markets like on Morpho or Euler and so on, the terms that you can set up for these markets are purely driven, almost purely driven by the collateral, right? Like there,
Mhm.
you just look at the price. If the price goes down, you get liquidated and you don't look at anything else. But if you can replace at least part of this collateral with an ability to see that this party is healthy, they are doing good things with my money, you can make markets way more efficient and open up the doors for way more strategies than that are just dictated by the pure collateral itself. So that's why it's important that to have verifiable information live that you can incorporate in your risk assessment and in many other things.
Yeah, I mean, you're talking about trust that can be earned. And I think when we do that in a real-time manner, think about the scalability of that, because there's no delay, there's no speculation. That's huge. What kind of, as the CEO of Cannibal, like what led you to partner with vlayer? Like what was the main kind of priority that caused you to go and chat with vlayer and to help you guys do what you're doing?
No, so like one of the things, it's obvious and trivial. So Marek and Hubert are Polish, and they are also from. I think they like their office. It's in Warsaw. I believe
Yep.
they
Yep.
also could be from Warsaw as well. I'm not sure exactly. So there is not that many Polish founders. Maybe Redstone. It's another great project from Poland, and Golem back in the days. But there is not that many. So when somebody is doing something in crypto on a relatively serious level, then it's easy to find each other. And then obviously like vlayer, like verifiability, accountable verifiability, a bit different flavor, but in reality, like what we are doing and our setup is consisting of is basically the we are trying to get to as high of verifiability level as possible, right? Because like verifiability, it's non-binary. It's not like I'm verifiable and you are not.
Right.
There are levels to it, and it's all one big picture that you're trying to create and get this picture to as high quality of data and as much verifiable as possible. So with the zkTLS solution, which is arguably on the market right now, like the highest tier of verifiability, we are basically able to make sure that the clients that are receiving the data are receiving more, like higher guarantees in terms of like how much they can trust it. So it's another risk dimension effectively, right? Like a party that's verifiability level, it's, I don't know, 20% versus a party with 90% verifiability. Where would you put your money to? We are, maybe making baby steps at the moment and saying, oh, verifiable, unverifiable, but later on there will be levels to it. You're going to have credit ratings on top, stuff like that, that all need verifiable data in order to work properly. So it was a natural extension for us to not only be able to use our connectors and hardware guarantees, meaning secure enclaves, but basically be able to use zkTLS in our setup, in our like on-prem setup, so like where we are deploying the software on a user's machine, and use vlayer's technology basically to be able to achieve this level up in terms of how much we can trust the data flowing through it.
Yeah, that's incredible. I mean, what you described is so important because it allows for so many other use cases that to kind of build from this. I mean, I have so many in my mind, but I'd love to hear kind of like what are some of the industry specific or use cases that you see maybe in the future with this relationship with vlayer that we might be able to tackle together.
Yeah, listen, so like the list, it's incredibly long because you can basically assume that any counterparty that does something off-chain in any capacity is an applicable client to it. So if you think about RWAs, those yield-bearing products, lending, borrowing, right? Like lending unsecured is basically dead since 2022. But with this type of technology, you can finally ask the right questions and monitor and see the financial health of your counterparty in real time. This way, you are opening up a lot of possibilities to resurrect it again, and that's much bigger market than the over collateralized lending that we see today on platforms like Aave and so on. But from interesting innovations, that because we need to always remember that when something becomes possible, then the number of opportunities that you can create out of it that we still don't even know that they're gonna come is big. So recently a market maker came to me and said, listen, what if we can create sort of like an LP position with the native token of the project on exchanges, right? So like sort of LP position, not on Uniswap, but on Binance in a sense. So if they can use our vaults and basically VCs, project, the token holders, projects themselves can supply capital to the vault. The token market maker comes, takes this cash, deploys on centralized exchanges, decentralized exchanges, and then with the use of the data verification platform, they can prove I'm doing a good job. I'm keeping the spreads tight. I am providing the liquidity as I'm supposed to be doing. Then you can create sort of like your own liquidity with the resources of your whole community, basically. It doesn't need to be this, sometimes shady deal between the project, the foundation itself, and the token market maker behind the closed doors.
It happens all the time.
Yeah, you can democratize providing the liquidity and creating your sort of liquidity together and supporting the price and aligning the token holders together, to do it also on centralized venues. But you can only do it when you have the verification in place, because otherwise, the borrower can just take the money and run away.
Yep.
So this is just an example, right? And I think we're gonna see a lot of innovation with the use of this tech.
Absolutely. And with your vault as a service, right? That makes it so the managing of all that makes it so simplistic.
Yeah, and you have an idea, and the what we are basically giving to you are the means, the tools to make it happen, and plug the verification to it. So what we are trying to change is that there will be yield opportunities and verifiable yield opportunities, and we can give people means to make it happen. And I believe right now it's seen a bit as an edge, as something like, oh, it's nice to have. Maybe I'm going to score more deposits because of it, because I'm transparent. But I think in the future it will be seen as necessity, same as smart contract audits are, right?
Mhm.
In 2017, you could get away with it, right? Oh, let's deploy the money. If it rugs, it rugs. Who cares? That was normal. It
I
was a
cared.
nice, yeah, you cared, but many people were just YOLOing in
Yep.
and thinking that, oh, they have an audit, they need to be legit, they are good
Yeah.
party, but you could get away with it. And right now, with all of those yield options, right, at one point you will have so many parties that are proving that they are doing the good job with your money, that if you are not, then why the hell do you count on getting any dollar coming your way if I can choose 10 other options that are giving me this comfort? So slowly but surely things are changing, and together we need to basically make a push to improve the standards, and that will almost never go from the people that offer those yields themselves. It needs to
Yeah.
be a collective push that tech is there. You have no excuse to not use it, in order to prove to us, as your depositors, as your users, that that you're the guy that we should trust. So it's all on us. A lot of education.
And this is where the true adoption happens, to be honest. I mean, it really does. From Web 2 to Web 3, everybody says, let's bridge that gap. These are the projects. What we're doing together is really what's going to advocate for true Web3 adoption, and to the point where Web3 and Web2 will be synonymous. I don't like that we have to separate those two terms. I think with these types of technologies, it can just turn into the better internet. It's like what you kind of started out with. So really appreciate what you guys are doing. For those that are watching, we'd love to kind of hear what are some of the ways that I know you have some really cool waitlist opportunities with some of the apps that you've been built, but tell them what they can do to get started, or how they can get involved or look out for. We'd love to kind of give some insights on what you're doing.
Yeah, sure. So if you're a business in broad sense, and you are doing something that would be requiring the verification that can help you to score more deposits, more clients, of course, that's one angle. But second, if you are just a counterparty that would like to tap into those verifiable yield opportunities, as I mentioned, we are launching a so-called yield app. So basically, the counterparties that are utilizing our verification tech can open fully customizable vaults, and they can be credit vaults, there can be yield vaults, something like Morpho, something like Maple, whatever they will come up with, and they plug the verification directly to them. That's why we call them verifiable yield opportunities. So something pretty unique on the market. I think nobody is doing something similar. And then as an LP, you will be able to some of them, because some of them will be only for enterprises, but some of them will be allowing retail capital as well. So we would like to invite you to participate in our early stage of the platform. We very much value early testers. We are launching on Monad testnet, so you can also get familiar with a new chain and see what's happening there, how fast it is, and so on and so on. So please sign up to our waitlist. We are going live very soon. And of course, follow us on socials. We are having a lot of educational content, a lot of articles about the tech, what's coming. So You wanna be one of the first to join us to define the new era of finance, and this era is verifiable.
100% damn straight it is. I mean, I for one am excited about yield app. I already signed up for that for the waitlist. I think a yield aggregator. There's some out there, but none of them, like you mentioned, don't have the verifiability of yield opportunities. I mean, this is all what we really want, right? Because we love these yield opportunities. It's a great way to make passive income. This is why many investors are looking at these opportunities versus TradFi, where you have your limitations. But what Web3 does is it enhances the ability to what we can do on that. It's just we've been seeing so many uncertainties, and so this I'm very bullish on this yield. That everybody take a look. We'll put the links below to after the show, so you'll be able to take a look at it. Sign up, follow them on X, and then obviously thank you so much for a vlayer fan. Please follow us on X if you haven't already, or check us out at vlayer.xyz to learn a little bit more, and you'll see a lot about our partnerships together. And I promise you there's going to be some cool stuff in the works about what we're going to do together with Accountable in the near future. We just got a little bit of a taste of what's happening. Wojtek, this has been amazing, my friend. Great conversation, and really appreciate it.
Likewise. Thank you, guys. And indeed, things are brewing. So be on the lookout for our releases together with vlayer. And yes, we are really pushing the bar very high for the space. So we need your help to also, emphasize that this is what you guys want. You don't want new Celsius. You don't want new FTX. You want a new era of finance that you can sleep well at night and still get the benefits out of it, right? So we need to do it together.
Let's go. Appreciate it, my friend.
Thank you.